Right, welcome everyone to the weekly stock market update. And as ever, I promise you 20 minutes and you'll be done. We will finish in that timeline. Let me know you can see and hear me, and I'm going to share the screen. We're going to get through. We've got 84 slides to give you the most comprehensive update on the market. Okay, so you should be able to see my screen right there. Like I said, let me know you can see and hear me. Any questions you've got, put them in the chat box as I go along, and I promise I will answer all of them. So first things first, where are we? How are things looking? Well, one of the first things this week which came across my desk that I want to share with you, Bank of America said very bravely, buy these 16 battered tech stocks that will turn strong cash flow into upside, even as the sector losses in tech are getting absolutely steamed. So which are their stocks? So I looked at their stocks, and as you will know, if you follow me on Telegram or my various social media channels, I'll look at these stocks, whether it's from Bank of America, Goldman Sachs, whatever, and then I'll cross-reference them against my approved filtered list. And I'll put that on screen in a second, just to see if any of them make it. Well, unfortunately, none of them did. I'll share those stocks in a minute. I've got to remember, you've got to come to this. Have a look, alpeshpatel.com/Spain. I'll talk a bit more about it. I'm very excited about that. Spend 2 days teaching you investing. Anyway, which were those stocks? So these weren't on my approved filtered list. They think they're good. They've measured it by free cash flow to enterprise value. That's entirely up to them. Micron, we've got a whole bunch of others. Qualcomm have had it in the past. Lam Research, they've got Applied Materials, Teradyne, and so on. Fidelity National, Meta. You might want to take photos of this as we go along. Okay. Like I said, it didn't make my list, but it's been on theirs, which is perfectly fine, entirely up to them. But sadly, none on mine. So where do we stand in terms of the market overview? Well, these are the PE ratios of a variety of stocks. And you can see in banks, we've got some relatively cheap stocks. Amazon keeps coming up. It's cheap based on a price earnings ratio. But at the moment, even on a valuation metric like the share price compared to the profits of a company, they're all getting battered. Why are they getting battered? Well, there's a downward trend, so momentum is a key factor. The other one is future expectations. People are saying, well, that's your historic earnings. In the future, what's going to happen? And they're feeling the future is just a bit too uncertain. Okay, so where else are we on this? This is the 1 week performance, roughly the 1 week performance of these companies. Energy continues to do well, despite taking a bit of a battering recently. And even with energy stocks, you might want to pause and say, well, you know what, I'm going to step back from those. Because if you're stepping back from those, unless you're bottom fishing, there really isn't much to look for in the markets, and you're waiting another week, which is what I'm having to do every week. And now half the year's gone by, but so be it. At least I'm not down 40-odd%. Okay, and this is the price earnings growth ratio. So price to earnings growth. It's another measure of valuation. Green is good, red is bad. And it's a different way of looking at the valuation of companies. You've got a few financials still coming up, energy still coming up, despite that momentum and their rises, it's still relatively undervalued. And I guess that's partly because, well, we're playing catch up in the sense that we're thinking, how long is this going to last? And people aren't expecting these bumper profits that energy companies are making. As you'll know, information is not incorporated into the market instantly. So you can have oil prices go up to over $100, but it doesn't mean stock prices jump up immediately. It just doesn't get factored in instantly. And that's why you still got low valuation and yet rampant growth in those companies through momentum. And the reason I wanted to explain that is because sometimes people wonder what's the interconnection between momentum, growth, valuation, information, and how quickly it gets incorporated. What does that mean for what we might be holding? Well, I'm sorry, but I'm waiting. I'm not getting into more energy stocks this week. I had some from a few weeks ago, and I'll show you what's happened to those in a second. And they've taken a bit of battering last week, which meant that as a weak holder, not a strong holder, not somebody who's determined to hold them forever, but as a weak holder, I've thought, yeah, thanks very much, I'll get out of these. So what is the market overview? That's the S&P 500, and still strong downward trend. In fact, since that was published, it's fallen further. Okay, and that's the weekly chart. The monthly always gives a better indication. And that on the monthly, if you look, and the thing that gives it away, and the monthly tends to override the weekly, if you look at that, that is like, think of it like a stone, and it's like vroom, or a rocket. The trajectory, the angle of momentum is just too strong. And so that continues moving low. That's the S&P 500. That's the headwind. That's the market background. Now, against that, an Apple or any other stock is going to find it difficult to move back up. Now, you might say, well, wait a minute, is it time to get into Apple? Well, we'll make a decision on a week-by-week basis. And at the moment, given the headwinds from the broader market, given the weekly market charts are still suggesting momentum is moving lower, and then I look at the monthly, and again, like the S&P, it looks like it's going to drop lower. I say, well, I'll give it another week and wait. And what happens when I do that? Usually the price is cheaper a week later. For stocks, we're in a deflationary environment right now, particularly for tech stocks. Similar story with Microsoft weekly, and then you look at Microsoft monthly. Amazon weekly, Amazon monthly. Okay. Meta looks like it's formed a little bit of a base. It might well have formed a base at 200. But I'll wait another week, and I'll update you next week. If you're signed up to these webinars, whether on my social media or elsewhere, you'll see that you'll get an invite every week. Costco, one that I particularly like, but weekly, then monthly. Monthly still looks like, well, downward trajectory seems too steep. I can wait. Is it going to kill me to wait a week? And all investing is about judgment and decision making. And if you don't have to make a decision this week, why would you not wait another week until you have to make it? Like most things in life, if you don't have to do it right now, usually better to get more information and do it when you've got more information. PayPal really does look like it's forming a base. And this is sort of ahead of the pack in the sense that this is how bad things could be. Look how far it's fallen. Let's look at the monthly. Again, I'll wait another week. See, some of the tech stocks are like up here. They're still falling. And look what could happen. This one hasn't quite flattened out. You're really going to need about a positive couple of months before I'd look to get into it. But it does look like it's got a base. By the way, it's even lower than it is on the chart now. It's at 71. Westlake, a few others, which sort of are ones that I look at just to keep a flavor of the market. That's rising, the chemical company. Qualcomm, it's come up a lot in different fora, but no, afraid not. Got to wait. Johnson & Johnson, if you've got favorite stocks for next week you want me to look at, just put them in the chat box. Let me know, and I'll make sure I'll do it. Johnson & Johnson's come up a fair bit. It's a defensive. People say, well, you know what? Should I have this? I'd rather still have cash because it's still going a bit flat to sideways. And maybe next week it won't be so bad. Katera, I own, and it's continued going up a bit, though. All of these energy-related companies have taken a bit of a hit this past week. So as a weak holder, I've got rid of a sizable chunk. If you're a risk-neutral holder, then you might hold them until they drop, say, 25% from their peak. And if you're risk-loving, you just keep holding them for longer. So it depends on your own appetite. Okay, so I've had to get out of Mosaic because it's just fallen too far off the peak. And Devon, I didn't have to get out of Devon, but I chose to because it's fallen a bit and I'm a weak holder. And I said, you know what? I'll rather take the profits and run. It's been a year where tech hasn't given me bumper profits for the first time in 10 years. So let's just take some of these and run. That's just personal. Marathon Petroleum, still rising, still looking strong. Valero, looking strong. However, if you're a weak holder and you see some of the pullbacks, you'd get out. So you'd say to yourself, am I a weak holder? No, am I risk averse? Am I risk neutral or risk loving? And based on that, you make your decision. If you're very risk averse, you keep holding cash. You have your money in a bank account. Don't worry, we've not finished. We've still got about a whole bunch more slides to go through. Don't forget my campaign for $1million.com, free copies of various books, including my own, to download. So which defensive stocks are worth owning during a period of stagflation? Well, according to Jefferies, you can see it here. According to Jefferies, the stocks to hold, which are defensive, in other words, people are always going to get ill, so healthcare. People are always going to, they go Gilead Sciences as well. They're going to need energy, even if there's a recession. So you got some of the energy companies, and they're going to need food. So you got the food companies, and these are the numbers that you've got there. Are we getting into them? No, not necessarily. Well, wait a minute. What about people who, if the markets are going to continue falling, what about big famous hedge funds who are short the market or believe the market's going to fall as well, like Cyan Asset Management, Michael Burry's hedge fund? Michael Burry was the guy behind the Big Short, and this is his portfolio. What do they hold? This is what he holds. Interesting, given that he thinks the market will continue falling lower. So he still has got Apple, Booking, Alphabet, Meta. Now, I think he's bought them a bit too soon. Avinative, I think he's bought them a bit too soon. but he'll be looking at a longer term perspective. He certainly can't go into cash, can he? Because that'd be a bit odd, saying, I'm going to charge you, Alpesh, even though I'm just holding cash. Because I'll say, hang on, my bank actually pays me to hold my cash, and you're charging me to hold my cash. So they have to buy something, and they're treading water, and that's how they're doing it. Well, what about Warren Buffett then? What's his view? Given that he's also looking at this and saying to himself, well, how's the market? What shall I hold? Well, that's what he's holding. Don't worry about that. Don't worry about that. Don't worry about that. I want to show you this. High inflation, rising inflation. You can see it over there. And what does that look like then? Well, that's the story with that one, which is high and rising inflation. We want energy. We want utilities. We want staples. Why? Because they're defensive. And you might have a sector bias. We're certainly not going to try and second guess which stocks we're going to pick. That's the Dow 30 stocks in each year at the top and how they've performed. Okay, each year and how they've performed. That doesn't look good in the sense that there isn't a pattern. That's what I mean by it doesn't look good. So we're not going to try and individually stock pick which is going to win. We're going to have to look at their valuation each year. We're going to hold for 12 months because we know nobody wins every year. So why would I pick something for 10 years? We're going to look at their valuation. We're going to look at their revenue growth. We're going to look at momentum. We're going to look at dividend yields. We're going to look at cash flow. We're going to look at volatility. Why are we going to look at all those factors? Because we know all those factors impact future share price performance, and all those outputs of those factors change every year. And that's what this map is sort of showing. If I turn for a second to the issue of trading and the markets, you see the dollar has done well. Well, this is, again, fallen back since then, but we found that sterling dollar has been rather easy to trade. The trends have been quite strong. Same with New Zealand US dollar, same with General Electric, and with Ripple. That's not an underlying story on Ripple. It's just to say the story has been somewhat easier. The trends have been easier, and JP Morgan have said Bitcoin's undervalued by 28%. Canadian dollar, Swiss franc. If you're one of my Pips Predator users of the indicator, you'll see that the trends have been easier, and it's come up several times as one that we've been just looking to jump into the trends on. Swiss franc, Japanese yen, also Ripple, US dollar. The trends have just been a bit easier to find. And Bitcoin, yes, it's fallen off a cliff, as you'll know, and that's been a fantastic short because it's just been unusually a one-way bet. They're not usually one-way bets for long periods of time, and it won't be a one-way bet for a long period of time to come either. Okay. HP, Litecoin, another one I want you to keep an eye on. Do we have questions on the market? Anybody want to ask me anything? If not, have a look at the free tools, alpeshpatel.com/links on there. I want you to have a look at those. There's also a few other things whilst you're doing that I want to show everybody as well. So if you go to that, all that free stuff's on there. I want to make sure everybody knows about it, is aware of it, and has a look at those things as well. Okay. The latest chart that I want to show on the S&P, and don't forget today, the time I'm recording this, the US markets are closed for Juneteenth. And what I want to show you right now, which I'm about to do, is the S&P. And while I wait for any questions that are coming through, anyone got any questions, just let me know. It's great that you haven't. I'll show you the next slide while we do that because we've got a bit of time. That's the indicator. So if you were wondering what I was talking about when I talked about the Pips Predator indicator, that's the website. It's all been revamped and rechanged. So have a look at pipspredator.com over there. Campaign for 1 million. And that's the summer school that I'm doing, which I'm really excited about. I intend to, everybody who attends, I intend to make it life-altering for them in the sense, in a good way, in the sense that I think they will get information of a quality and level that they've never, ever had by spending that time with me over those couple of days. So this is what I wanted to show you. Okay, where are we on that? This is where we are. Okay, you can see it's fallen off a cliff, but you can see how, and that's the monthly MACD, it's still falling. It's still falling. These weekly ones tend to fall and find a base sooner than the monthly, but the monthly pressure is still downwards. The stochastic tends to be premature, and the weekly stochastic, which is at the bottom, tends to bounce up sooner, but the monthly stochastic above it is still pushing down, and the monthly MACD is still pushing down. So how low could this go? I don't know. I mean, should I tell you how much we've fallen so far? This is how much we've fallen so far, 23% on that. How much further could we go? How much further could we go? Well, I'd have to start drawing some trend lines, and I might say, well, you know, I don't know. Is that a feasible, plausible trend line? Maybe this one is. In which case, what we're seeing here, in which case maybe that's it. Maybe we're at the base and we start bouncing along a bit more here. And if we do, and for argument's sake, let's say we're at the base and the markets have bottomed, as it were, well, it doesn't mean we're going to go straight back up. It might mean that instead we just keep going at this trajectory, which would mean in about 1 year, 8 months, we'll only be up 16%. Let me just draw that a bit more accurately for you. Okay. Well, let's push it back to just 1 year. Where will we be in a year? Okay, we might be in a year just up 9%. You see, you can have a market which falls back. Doesn't mean we're going to go back to a bull market, i.e. racing ahead. It could mean we're just going at a lower trajectory, and that's the lower trajectory drawn up for you. And it could mean that the S&P goes up, say, 10%, in which case that's fine. We'll just have to stop pick from within that. Let me just pull this back. I want to show something. Right, press a button and this should come up. Just going to show also, this is what I was talking about earlier. If you're risk averse, you'd wait to deploy your capital. Okay, you'd sell any weak losers that you've held for 1 to 11 months, is what I meant by weak loser. And where you're down up to 15%, you'll hold your quality 5 stocks, your company 5 stocks, or companies which are sound and have fallen. And if you're partially risk averse, well, you'll wait to deploy capital, but you sell your weak losers. You might buy some ETFs. So you first work out your risk appetite. If you're risk loving, you'll say, no, it's all right. I'll buy Raj's approved filtered list of 10,000 odd stocks, and I'll be tactical. I'll look for companies with really low valuations and low volatilities. And I think that's one way in which to do it. And like I said, you know, we analyze 10,000 stocks. This is some of what I'll be teaching in Spain. We analyze 10,000 stocks, and we filter that down. So within 5 minutes, I can work out which ones look good, which ones don't. And really, I want greens on their value growth, cash flow, momentum, Sortino, Alpha. This is the entire Dow 30, the 30 stocks of the Dow. And you can see there's very few which currently meet my criteria, Amgen being one of the very, very, very few. We do that for the NASDAQ, the S&P, and so on. We also do it for other charts as well, the FTSE, exchange-traded funds, small caps, and share what's in Mr. Gates and everyone else's portfolio. So you can see that over there, what's in the portfolio of some of the billionaires, and what's in the portfolios of some of the big people who are consistently accurate. Now, if you copied, for instance, Vincent Lavaglio's ratings, he's an analyst since 2013, and opened each position for a duration of 1 year, 98% of your profits, your transaction would have been profitable with an average return of 72.5%. Not bad. So we look at his and we say, well, do any of those meet our current requirements and our current filtered list? So that's just to give you an idea. If there's no questions, we'll finish a little bit early. But that's just to give you an insight on just a little bit of how I teach and show people how to use that data, narrow it down, get there quickly. By the way, this I've taken from Goldman Sachs Asset Management. Depending on where you are, years of retirement. If you're at retirement, you'd probably have about 50% in equities, maybe tactically as low as 20%. The rest in fixed income or cash, as it were. And this is why we hold for 12 months. Okay, and this is why you should only have about 20 stocks in your portfolio, because after that, you're really not removing market risk. You might say, surely, if all of those were highly correlated to each other, well, you wouldn't have all 20 highly correlated. And anyway, when the markets fall, everything's more highly correlated in any event, including across geographies. Okay, that's another one that I've taken from, I think that's from Goldman Sachs as well, which is just how your portfolio would be split between fixed income, equities, and cash, depending on how old you are and the number of years you have to retirement. Obviously, closer to retirement, the more you're going to have in a bank account and in cash. Thank you all very much. Time's up. Time's up, but it's okay. I've got Philip. Can you talk oil price chart, where it's headed, and my view? What a brilliant question. Let me see if I can pull up the oil price chart. So I'm off the clock now, as it were. Oil. Now, there's a lot of different ways I can look at oil. Let's look at... I got to find an ETF. Okay, here we go. I'm just finding any ETF, okay? So exchange traded fund, because most people are going to approach it through an exchange fund. This is ProShares K1 Free Crude Oil Strategy ETF. This is where we are with it. What do we see on the monthlies? It's still, got a bit of an upward trajectory there on the monthly charts. So I'd say it's still got a lot of support. We're not seeing, anytime soon it's going to drop. Let me just put in more oil in there. So I'm doing this on the hoof, as it were. At the moment, I want to try and pick other ETFs that you might be looking at rather than obviously stocks. Well, exchange traded note on pure beta crude oil. This is probably not a good example, but let's say you were doing this and it's still looking strong. I mean, I know that fall came there, but I'd have to wait. And that could be the turning point, but I wouldn't want to get in that early. I'd have to wait to determine whether or not we've peaked. So there's still a long way to go there. And the other issue, in a way, almost the other problem with looking at it that way is, let me just get rid of that. The other problem of looking at it and deciding too soon is, well, look, you might say, maybe it's peaked, but let's say that's the upward trend, for argument's sake, you might draw a different one. Then, yes, indeed, it might fall to that level, which would mean about a 20% fall. And then it just continues going back up again. As I showed earlier, you can always have a resumption of a trajectory. And over the next 3 or 4 months, it goes back up another 20%. So at the moment with oil, I don't want to guess it. And I'm not trying to do an oil. I don't gamble my investments. So I'm not trying to do an oil trade on that one, as it were. I'm not going to it's just too speculative on oil. Somebody said LBRT. Let me just check LBRT. But I'm going to go because I do promise people. But I will do another separate thing probably on this. LBRT. No, I've only got Liberty Energy. I know there's an ETF with similar name. I'll have to do a separate one on that one. Listen, thanks, guys, because I always want to keep these to exactly 20 minutes. So thank you all very, very much for listening. And I'll do another one next week. Feel free at any point to email me. In between, any emails you send me, I'll do specific videos for that, and I'll post it on my LinkedIn and on my Telegram. If you don't know where those are, go to the links in my bio and also any of my social media, and you'll find the links. Just get your email across to me, and you'll see that you're updated on all of this automatically every single week. Thank you all very much indeed.